How's the Toronto real estate market in May 2024? I'm Brian Khatambakhsh, team lead at Khatambakhsh Real Estate Team with Remax Hallmark, and here is my analysis of how Toronto real estate market did in May 2024. As always, we look at the number of active listings in the market versus the number of units that are sold, which basically say what is the supply and where is the demand in the market. 8,888 active listing. Yeah, this is not the casino number. It's the exact number. It came out and is 8888. And compared to last year, the same period of last year, we have about 78% more supply. Well, supply and demand always dictate the price. So we see the supply side is hugely up from last year. And even if you compare it from last month, we are 18%. But April to May is a little bit of a seasonality in there too, but either way, the supply side of the market is a lot higher. On the demand side, we have about 19% less demand from last year, May of last year, 2023, until now, and 5% more sell from April to May. Again, this could be a little bit of a seasonality too. As I always talk about, the market is dependent on supply and demand. We know that will dictate the prices and how the market will shift. As you can see, the supply side has gone up. I don't know why. There could have been so many reasons. One of them could be the federal government's change in capital gain, or that's not been approved, but that could make some people think of selling, especially investors. So that could increase the supply side, and the demand side has come down because the actual high interest rates and inflations and prices finally caught up to consumers, and that's why they're just being a little bit more cautious. However, let's look forward. Yesterday, the Bank of Canada did the first rate cut since March 2020, which is over 4 years and 2 months. It's the first rate cut they did after the pandemic, basically March 2022, and this was a significant gesture. It wasn't a significant number, it's only by quarter point, but it tells you a few things. Number one, there will definitely be no more interest hike. The worst is behind us. That's what it means. The worst is behind us. Everything from now on is either going to be better than this or as equal to this. So that's the worst thing behind us. There's no more uncertainty about that. Second of all, Bank of Canada mentioned that they are planning to reduce the rate gradually, which means that there is more rate cuts on the way. So having said that, don't expect a huge drop. The consensus are that there will be another one in July coming down, and that should give market enough time by fall to see if these rate cuts are starting to show their effect. My 2 cents on this: if you were sitting on the fence with your approval and haven't bought yet, you're waiting for the rate cuts, it happened. It's time to start getting serious, getting the market. And if you're thinking of, oh my God, I'm gonna wait for the rates to come down, by the rates come down further than this, the prices are gonna go up, and you're gonna be paying for more money that you borrow. So would you rather to have a rate and then pay a lot less than have a lower rate and have a lot more borrow? I personally like to borrow less with a higher interest rate because I take a variable rate, and then next time Bank of Canada cuts, you are first in line to get the raise and raise and raise. So what I'm trying to say is, if you're a first-time buyer, you wanted to buy, this is a great time to take advantage of it. If you were sitting on the fence, you weren't sure that you should be doing it, this is the time to seriously look into this, because by the time you get in the market, it's going to take you 2 to 4 weeks to get everything ready, start looking at some home, write the first offer for the home you like. It's going to be at least that time. And even if you buy it at that time, it's going to take, in average, about 60 days to close the deal. So you're looking at about 3 months down the road. And if you were thinking of have a big house and you wanted to downsize, this is the time to start looking at some homes. Maybe you can pick something up now and rent it out for a year. Maybe you can buy pre-construction. Buy pre-construction that delivers 2 to 3 years from now. So you gain from that, and also your property will start appreciating a little bit more. So you kind of double dip on both ends of the things, all right? And if you were thinking of moving up to a bigger home, oh my God, this will be the best time for you. I tell you why. The price of freeholds, semi-detached and all that, historically close to the condos. This gap has never been this narrow in history. So if you were thinking of getting rid of your maintenance fee and moving to a freehold, this is a great time. convert your maintenance fee to a mortgage amount. Okay, with a little bit more, you can jump into a semi or a detached. We call that a ditch your maintenance fee campaign. We created that campaign. We call it ditch your maintenance fee. You can convert those inflated maintenance fees and move into a freehold with a very little money per day. We calculated that, and you will be happy you did, because your version of yourself 3 to 6 years from now, 3 to 5 years from now, you will really thank yourself you did that, because this gap is narrowed, and this gap is gonna it's gonna widen for sure when the interest rates going down, because always freeholds will just put a lot higher and appreciate a lot more. I'm Brian Khatambakhsh. If you have any question about any of the stuff, let us know. Real estate is alive. Any question at all, anything, you can always call us at 647-848-2652. That's my office number, 647-848-2652. Text us or call us with any question you have. And until next month, have a fantastic day and start making decisions and get into the game. This is a great time. Start getting into real estate market. Bye-bye.